Moving on to markets now, and on Thursday morning, I was joined by Doug Simon with Tredas. And this week, we talked about some things to keep in mind as we near planting and potential early planting. But a big part of the conversation centered on updates to the coronavirus and its far-reaching impacts, along with how the economy as a whole is responding.
I think bigger deal with China, we're wondering is when are they going to start importing corn and soybeans? There were some sorghum sales this week, which was very good. Still wonder about beef and pork imports, there as they replenish their meat supplies. So those are, big impacts, and we'd like to see some more activity on that phase one trade deal here in March. The Secretary of Ag was saying maybe into late spring, but yeah, everybody's keeping an eye out for that, and that gave us some optimism in the markets. After Friday it was pretty gloomy, and then Monday, Tuesday, Wednesday we had some rebound because of the opportunity. Or looking forward to that purchases.
Yeah, and I want to talk about the Federal Reserve stepping in on Tuesday with an emergency interest rate cut in an attempt to shield the economy from effects of a coronavirus outbreak. So any possible repercussions that might be felt in the market as a result of this latest cut?
Well, they announced the cut, the 50 basis point cut, and the market immediately collapsed 700 to 1,000 points, and that's a whole thing about expectations. And they were shadowing that on Thursday, and then Friday we had a reversal, off the lows that we put in on the stock market, but then that longer term it'll be good. I mean, we're not like 2009 where interest rates were higher and oil prices were $150 a barrel. We're in an economy where we've got $45 oil and low interest rates, and they did signal a lower cut, so it's not going to have a huge stimulus, but it's going to give some companies advantage. I mean, I had farmers, I was out in the country on Tuesday and Wednesday, people are, hey, can we, people talking about housing too and different things where we can refinance, or maybe we have lower operating notes, and all that stuff's definitely going to help longer term. It's not going to change people's opinion about, hey, am I going to go to Walt Disney World, but it's going to change their big picture. It'll help the economy in that regard.
Anything in particular you'd advise us to buy or sell right now?
That's a really good question. People are looking at gold and other commodities. Are we going to, if the stock market is falling, are people going to rotate out of the equities and go into the stock market? I mean, there's fear on everything right now, but people are buying some gold basically 20 days ago, 30 days ago. We've had a pretty good run up on that side of it. I better stay away from specific recommendations.
Okay, that's fair enough. Be diplomatic about it. Any particular sector of the market that's going to take longer to recover when we have outbreaks like this?
The travel industry and places where people are going into large areas. I think, interestingly enough, I just kind of think about it. Perhaps ethanol actually might do a little better if we have people going in their cars and driving to see family, or going regional areas. So we could see perhaps, obviously, crude oil. From jet fuel, and that time is suffering, but perhaps maybe ethanol margins have struggled since harvest, and so that's a big issue. But maybe we'll see some ethanol demand from that. Hopefully, maybe we get some exports going on that side of it.
Kind of along that same line, what about petroleum? Would now be a good time to lock in some of those input costs?
I know we were looking a couple weeks ago at nat gas and looking at people talking about fuel for the summer, and the seasonals are positive on both of those going forward, and so we have fallen off from where we were a week ago. So if it was a good buy then, I think it's a good buy here to be locking in. I don't know if we can really go down much more from here. They're talking about cutting some of the production out of the Middle East and Russia to I think their earnings start to suffer when we get down here at this level. So I think they'll want to see a cutback in the supplies and try to boost prices.
Let's look at planting a second, and particularly early planting. What have you seen here, and how's that going to impact things?
Well, down in the south it's been pretty wet. That's the one area that's really, really wet, and so they're going to be slow down there. But up here, I mean, we're supposed to be 70 coming up this weekend, and we were really warm and pretty windy. So actually, with the wind, there's fire alerts and that thing going on. So we dried out on the top quite a bit. So I think there's a lot of people doing some field work here when I was out in the country the last several days, and I think the way the March forecast looks, I mean, we should be in pretty good shape maybe to get planning on more normal schedule than we did last year.
Okay, and finally, so some little pre-planting advice for us, if you could. So any marketing or risk management tips that you'd like to share with us that we can take home?
You bet. Our February prices were established here last month. the average. We were 388 on corn and 917 on the beans. And so you're looking forward. Usually we like to look at pricing corn in the springtime in between February and June. Talked about that before on the show. But one of the things now at 388, the prices aren't too attractive. I mean, we're below that right now on beef corn. Hopefully we'll get back above that. But some work from Ag Resource last week had show that you should be around 105% of that 388 price. They've shown that we've been able to go back above that at some point into the spring. Over the last 18 years. Only in 2013 we didn't go above that, but we'd been in the $850 corn in 2012, and so we were kind of in a bearish market going down. But it gives you some hope that if we can get back up above 4 to 405, that's about 105% of that. A lot of times you can get up to about 110% of that springtime price, which puts you up into the 420s. But right now prices are pretty negative. But if we can get back up above those levels, we better have our selling shoes on and be ready to get some things done and look at that in conjunction to the PLC price, ARC price, and your crop insurance, and then look at your pre-harvest sales and put together. And that's what we do at Tredas, is help people put those things together. And how do you do it in I think, an organized manner, and so we're not kind of whipped around by all the volatility we've had this last 2 weeks and the negativity. And so how do we actually deal with that and do it on a professional manner? The other thing going on right now too, it's interesting, is we always talk about futures basis carry, but this last week actually the carry between the March and the May and March and the May and the board actually went positive on the March over the May, and the basis levels have been 10 over the March to 5 over the May now at Columbus. The basis levels were still strong. Those things are indicative of a positive market. The futures prices aren't very good right now, but the internal structure of the market telling them that, hey, we still need corn in this market. How are we going to supply it? How are we going to get it out of the farmers' hands and get it into the commercials? That's all encouraging. Usually is foreshadowing a little bit more positive prices, even though the world is pretty negative right now.